how are you? Okay. Ellie, how you doing? Am I pronouncing you right, Ellie? Oh, okay. All right. Okay. It's 6 p.m. Yeah, like I said, I think you were the one who asked about the Elliott wave, right? Or somebody else? I mean, few people asked me. So I decided to, and then remember I told you in the yesterday webinar that I'll do it. And just only about the Elliott wave. Okay. So we're gonna go and look into basic, very basic, because I keep it myself. Elliott wave is very subjective, first of all, and then it's very complicated if it gets to complex corrections. I don't bother with that. Okay, why? Because if you put few things together, for example, Elliott wave study and harmonic patterns, which they are in fact originally Elliott waves, plus SNR level trend lines, they tell you the whole story. So you don't need to go deep into, what kind of complex correction is that, it's a triangle followed by a zigzag and then flat. And if it is very clean, yeah, you go for it, and then if also if your trend lines and SNR level are supporting this study. If you have the Elliott waves and you see that, yeah, okay, it is bouncing and it's going for 38% for, wave 4. There is also a horizontal line, which is SNR level. And then you expect that, down move as wave 5. And then on a magic wave IB or, system, on a 5-minute chart, you start seeing that, the price starts to go down a little bit and then give you the setup whole scenario. Then, put it together and you make a move. And if you follow the simple rules, you should be okay. You don't need to, get PhD in Elliott wave. Okay. So I was just watching this. Watch this thing here. This is a number. Remember the 5271. This is Euro Aussie, by the way. Okay, just watch it. Market just started. It can do anything, but this is important number, and we hit that number, kind of pulling back a little bit. The trend is down on this Euro Aussie, so we may get some decent down move. Anyway, so let's get to the Elliott wave. Now this is a basic chart which you all have it, right? So what happened is that let's say if for some reason rate hike or rate decision or CPI or FOMC or GDP, any reason, any news about any currency, when the news comes out, market moves, that currency moves, especially that currency, right? And every currency has 4 or 5 pairs easily, right? For example, yen has 7, 8 pairs. So if there is a news comes in, a yen news, which makes it, let's say, strong. So very good news about yen, and a lot of people say there's time to buy yen. So all those pairs are going to move. All right, so half of the market is going to move because you have out of 20 pairs, you have 7, 8 pairs which involve yen, right? Euro yen, pound yen, this yen, that yen, USD yen, New Zealand Kiwi yen, okay, Aussie yen, CAD yen. So if yen gets strong, yen is always on the right hand side. So if the news comes in and yen gets strong, all those pairs are gonna go down, because if the right hand side things goes down, okay, the pair goes down. If the pair, if the right hand side currency gets strong, the pair goes down. If it gets weaker, pair go up. Similarly, the left hand side currency, if that gets strong, the pair goes up. The opposite, okay. And when if it is getting weaker, the pair goes down, okay. So the whole market moves. So basically, news is the one, okay. Any news is act as a catalyst and it moves the market. So for example, let's say if any currency, the price, let's say this chart, right? So we were here somewhere, and the news comes out, and boom, everybody starts shorting the pair, and then price start dropping, and get to a support line. So now, where do we stop? From where we start and where do we stop? That's the question. The news comes in, market moves. But before moving, where is the market? Market is always the previous move, and then it stops somewhere, right? Where? Either sub SNR level or right around the daily range area, okay? Or most likely there's probably a pivot as well, right? If let's say the price dropped, it was below the pivot, news comes in and boom, S1 gone, S2, the price stops, right? And it sits there for the next 5, 6, 8 hours waiting for another news or another catalyst to move it. Okay, so for example, now if the price drop and it sits on S2 or any other support, and then the news comes in, and it's this time the news is good. So when the good news comes, the currency gets strong and the pair goes up. For example, let's say euro, right? Okay, if the euro is on the right hand side, hi Bala, how are you? Euro is on the left hand side, euro USD, right? So if the euro news comes and it is good, then even if it was dropping before, the news comes out good, the euro USD, the good news means that everybody's going to start buying euro. Then obviously in euro USD, the USD is the second currency, so you sell the USD and buy euro, right? So USD gets weaker, then the pair goes up. So you were dropping before and you are sitting at the support. The good news comes about euro gets strong, euro USD start going up. So from that support area, okay, then it goes. Now, it need to have a resistance to stop it. Otherwise, it will keep going. Second scenario is that everybody knows that it makes the waves. So everybody is very cautious about that. If they are in profit, the market don't just turn around and take away the profit and even take you in a loss, right? So what happened is that everybody started looking for an area where the up move. Now that after the news we are starting going up, then there's an up move, and everybody started looking at where and especially when you make an entry, you're in a profit, the prices keep going up, and you are happy and this and that, but you're afraid that it might gonna make a turn. But the question is from where, right? So these are the calculation. There are some calculation about if the price makes the turn and goes up. So there has to be a resistance to stop the price, and then the price will make the turn. So everybody wants to know that, and everybody wants to get out at that point with profit before the market turns against them and take away the profit. So that is a very important area. Right, so we figured out that okay, all the horizontal level, daily SNR levels, weekly, these highs and lows, and Fibonacci 61.8%, and this and that. So what happened is that let's say 10 million people are looking, but most common figures, more people will look for the most common areas, right? And that will become a strong area because everybody's saying that, yeah, man, there's a very strong low made, and which is 150 pip above the move, and the euro USD daily range is around 150 pips, so most likely the price is going to stop there, right? It's a very common thing to understand, or comes in your mind the first thing. So out of 10 million people, 7 million are thinking about that area because it's so obvious and so common. Then you do the Fibonacci, 61% is coming as well in that neighborhood. So what happens is that when the price goes around that neighborhood, everybody start taking profit. Okay, so suppose this was the area first. The news comes in, the prices start moving. Everybody's coming, going long, and the people were short before they close, and then start turning. So they see the prices going up. So they will go long, and then all of a sudden they see this, that resistance is coming in. So we start taking profit. Okay, and a lot of people are still skeptical going long because they were shorting the thing, right? But now they are saying that it is making a higher high and going up, and the news is good. So is it going for a long few days, maybe a week or something on a higher time frame? It says, yeah, it looks like it has room to go. So the long scenario is more and more obvious. So when you get to after the news, we go long, and then when we get to the first resistance area around the daily range, or maybe R2, all right, if you go long above the daily pivot, the R1 take out, the R2 approaching, and everybody start taking profit. Okay, man, enough is enough. I'm 70 pip positive and this and that. Well, I'll wait for a dip and then go long again, but right now I'm taking profit. So right around here, everybody start taking profit, and then boom, the price drops because the orders getting close, right? So usually, it is very important to find out or notice that which move is the one that buyer or seller coming in, and which move is the when the buyer and or the sellers getting out, means taking profit. There are moves that is caused by people coming in, and there is a move when the people coming out. All right, when the people come in, it's a strong move. A lot of people come, a lot of money comes, but when the take profit is usually less momentous. Okay, so right around here, when people start taking profit, and then price comes down here, but then start dying out because it's just taking profit. Nobody is selling it because people are skeptical. It made the higher high already, right? And the good, the news about the currency is good. So, that obviously that the currency should get strong unless there's a news comes in, maybe later, a couple of days later, we have something else scheduled, and that comes bad, then probably market will turn to the downside. But right now the news is good. We went up very momentously, and heavy momentum, heavy volume, and then start slowing in a two-wave fashion, a two-wave A, B, C kind of retracement fashion, right? Around 61.8%. At that point, people start seeing that, this looks like a ABC correction. It's two waves, around 50%, 61, and now it is stopping here. So maybe we are going up again. Now, the people went long from here to here, them plus the people were not long yet, and they were short before, they're going to come in too. Because they see that, okay, now that the game has changed, we are getting stopped around here, 61%. There's another SNR level. We are holding above it. And then all of a sudden, somebody make a move, a big guy, let's say Federal Bank or something, and then you see a nice, beautiful, engulfing candle or something, a sign for us that, yes, the big guys are going up again. So everybody jump here. And that's why now the next move will be very, very momentous and very big compared to the wave 1. This is wave 1, then we retrace to wave 2 because that was a take profit here. And then all of a sudden, everybody gets here to go long because they feel like, we make the higher high, low, but low is not going below 61%. Or 50% is staying above, and the news is good about the currency, so it need to get strong. This pair need to go up, basically, right? Or the major trend is also up, so you get more enthusiasm about that, and then everybody start going long here. First, for example, if from here to here you had 100 people long, now you have 500 people long, and this thing flies like a rocket. And that's why this wave 3, we call this wave 3. So we go up, wave 1, good news, take profit. Another good news, or not even good news, but there's a lot of people coming in. Positivity is on the peak, and then you start going and you see a big move as wave 3. Wave 3 is normally the rule is that it cannot be shorter than 3 waves, 1, 3, and 5. But most of the time it is the biggest one. Okay, 1 and 5 are most of the time equal and shorter than wave 3. Wave 3, to me, I would say wave 3, the most common calculation is 1.618 of wave 1. Okay, I'll get to that later. So wave 3 comes in like this, in this fashion. After going, and everybody knows now I'm teaching you, somebody taught me, and a lot of people know that around that area, around 1.618, wave 3 will die out. All right, unless there's some news that there's maybe a news, and then all of a sudden you have a good news here, and then later a bigger and a better news comes in here again, and then that thing can even go higher, which we call extended wave 3. Well, that happened, but sometime. Usually is around 1.618, 1.786, it will die out. Sometimes it is only 127, which is the part of a correction, basically. Okay. It could be wave 3, but most of the time it's a part of the correction. That's detail. I don't want to go into detail and make you confused. Simple. Wave good news comes in after price dropping. If there was like bad news, price drop. All of a sudden it's good news, price jump. Profit taking, wave 2. More people come in, go long. Wave 3, again profit taking for wave 4. But now people start thinking that, man, you know what? Wave good news is good news, fine, but we gone up too far. So need to be careful. So now we have less people coming in here because we already made profit here, and there's less people says, man, it might be doing a correction. Be careful. Okay, so less people come here, and then sometimes this goes to 1.61, 0.618, 0.5 or 0.618 of wave 3, but sometimes get truncated as well. The reason is that if people get in, but you get a bad news, and then this thing doesn't go up. Okay, not even higher than wave 3. We call it truncated, but I'm not going to talk about that. Keep it simple. Okay, so wave 3, after wave 3 we get wave 4, right? And wave 4 is usually around the same way as wave 1, same size, should I say. But there are differences, I will tell you later. But the wave 4, and then we have wave 5. Wave 5 is most of the time is equal to wave 1, same size, and wave 3 is big. That's the most common phenomena, right? Now the corrections, this A, B, C, and here A, B, C, 3 wave correction. So impulse wave are 3 in this whole, say 1, 2, 3, 4, 5. Once we reach this 5, then usually what happens is that some bad news comes in again or something, and then we start retracing. Even if not the bad news, then the market will retrace, because that's what it is. That's collective psychology, with what we call okay, that we have gone, and now everybody knows that after 5 waves we go in correction mode. So everybody starts selling here to go into correction mode. So, and then we end up in a correction mode anyway, even if there is no news. If the five waves to the upside are clean, then everybody sees them, and then we go into correction. So now from these this whole 5 wave fashion is the wave 1 of a higher degree. For example, if you're looking at a 1-hour chart and you can count 1, 2, 3, 4, 5, then this whole thing is wave 1 on a 4-hour chart or a daily chart. Then you need wave 2. Wave 2 will consist of the correction of these 5 waves. That comes in 3 wave, A, B, C. Now, see, is this wave 1 will also have this 5 wave and 3 wave phenomena on a smaller time frame. If this is 1 hour, then you go on a 15-minute chart, then you will clearly see the 5 waves and 3 wave correction, then again 5 waves and 3 wave correction, then again 5 waves, small. Sometimes you don't see it, but like I said, if it is messy, leave it alone. Don't even think about Elliott. Okay, look something else. SNR level, this and that. I only follow if I can count clean, Elliott wave. Then I make the chart and then I do it. If not, leave it alone. You look from the other angle, other studies like harmonic pattern, SNR level, channels, what's there. Okay, so you'll find something. If you know all of these, you'll find some study fitting into the scenario, and you take it from there. So this wave 1, wave 3, and wave 5, we call them impulse wave, and wave 2 and wave 4 are corrective waves. These corrective waves consist of 3 subwaves, A, B, C. A, B, C, right? See that? A, B, C, A, B, C. But wave 1, 3, and 5 are impulse wave, and they have 5 subwaves in it, right? Here, here, you can see 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Now, similarly, in correction, we have A, B, C, and even it's a small one. So in A and C are also impulse wave. There could be a corrective like 3. We have a correction, it's called 3, 3, 5. But here I'm showing you 5, 3, 5. 5, 3, 5, we call a zigzag, basically. Okay. Again, I'm just telling you, but we're going to keep it simple, very simple, basic one here. Huh? So there's 5 waves, and then you have 3 wave correction. I'll show you a chart where this is what's happening right now currently, and I've been following that for the longest time. So not me, no, we all. Okay. So 1, 2, 3, 4, 5. We comes down A, B, C. 1, 3, and 5 have 5 subwaves. Also A and C can have 5 waves as well. Okay. And 2 and 4 and B, they either, if it is a flat or zigzag, they have 3 waves. Or this wave 4 most of the time can also make triangles. And wave B sometimes fall into triangle. Sometimes. Most of the time not. But wave 4 most of the time. If you pay attention, you will find nasty triangle in wave 4. And these triangles are, I'm really telling you, these are nasty triangles. If you don't know, sometimes they are very nicely, calculated, moved, but sometimes they are very, very dangerous. So it's better not to put your hands in there. If, let's say, if you find wave 8, 1, 2, you get in here, you make some good profit, let it drop completely after, 38% finish, and then you go for wave 5. Leave that wave 4 alone. It could be a flat, and even flat, it can have a regular flat or expanded flat. It's a lot of bad things can happen there in wave 4. And that's where most of the people loses the money, in wave 4 or B correction. Okay. So let these wave 4 or B, finish, and then when you see, if you're understanding it, that you're okay, this is A, this is B. Even if you know that this is B, don't try to trade it. Okay, it's very bad. And then once it's finished, probably like this is, you see what is this phenomena here? Can anybody tell me? This is, what is this, and what is this, and what is this? This is what happened. And it's Elliott wave, 1, 2, 3, 4, 5, 3, 4, 5, then 5, this A and B. What are they making? They are making A. Anybody? Nobody? Okay, so you see this is left shoulder, this is head. Okay, Chris, now you tell me. Okay, all right, yeah, I got you guys now telling me. So this is clearly a head and shoulder. So now you know that where head and shoulder. When you see a head and shoulder, try to see 5 waves before, below, or not below, before this move, this head and shoulder. If you see the 5 waves and you can count, believe me, you can go for a heavy wave C, and you can trade with confidence. But sometimes what happens is that this happens when you have a correction, like only A, B, C, 1, 2. Then wave 3 comes here, right? And sometimes this is at wave 4. I'll show you later on. So what happens is that wave 4 will finish here, and if you go and it goes up, and you try to go short here, it will come down around here, and then goes up. Right? So I'll show you a chart where you will see that exactly where you will see. In here, even you can see that this is big head and shoulder, right? But this is a regular head and shoulder. But see, this between this wave 3, wave 4, wave 5, and A and B. Don't you see here an inverse head and shoulder? Right? So inverse head and shoulder, and if you make a neckline here, and then if this thing going up, breaking the neckline, and you go long, look what happened. Right? But here also you have inverse head and shoulder. You have left shoulder, you have head, you have right shoulder. But if you make an entry, long entry here, what are you gonna reap? Right? So that's the difference between same thing but location. If you understand this Elliott wave, you can pinpoint the location, and then you be aware of it that okay, if this neckline breaks, uh, then it will make me overbreak. Then you can find out that break of a neckline can also break you as well. So, and see, this is, for example, this is also head and shoulder, regular. See, left shoulder, head, right shoulder. Price start dropping. If you go short here, what will happen? But you have left, right here. See the same thing, regular head and shoulder here, regular head and shoulder here. If you go short here, where you go? Okay. So, but this is just, I explain you, it's a head and shoulder, simple. But this is how the Elliott waves are: 1, 2, 3, 4, 5, then A, B, C correction. So you have 5 waves and 3 waves. But this whole thing, for example, if you look in all of this phenomena on a 1 hour chart, then you go on a daily chart, you will see only wave 1 and wave 2. Then you need wave 3 to the upside, just like here, and then followed by wave 4, wave 5 to the upside. So if you can pinpoint on an hour chart or something like that, and this, and this is like around 78% or 61%, or maybe a small Gertley kind of thing, or maybe a bad pattern you see on a 1 hour chart, and then you see that it is holding, and then it might be going to the upside. On a daily, you need an upside wave 3, big one, instead of seeing only this thing here and see that, yeah man, this is a downtrend, so just keep going short. Okay, so if you understand this, then you will be aware that this is the end of it, to the down, this end of this downtrend, and we're gonna be going up big time for big wave 3 on a daily chart. So what you need to do is you be careful, and then you need to go take only long opportunities, and especially when you draw a trend line and then trend line breaks to the downside, even going down, you will see all this wobbling around, waves, small waves, sub waves. So every sub wave moves, you will take the retracements and go long, long, long. Whenever it is dropping, leave it alone, and then when it's going to the upside again, go long, because overall that this is on a daily. You have only wave 1 and 2, need wave 3 way to the upside, right? So this is and these Elliott waves are all on all time frames, from in a 1 minute chart, tick chart, or 5 minute chart, a 10 15-minute chart, you can see it. So if you see something like that, the bullish wave 1 2, you can count 1 2 3 4 5, and A B C 3 wave around 61%. And then look what happened in the background. So if the trend is up, then you have a big wave 3 coming up to the upside. Okay, if this drop is not 61%, instead of that, it's only 38% at this right around here, then you know what it is. I didn't tell you right now, but I'm going over there now. Okay, so how do you measure these waves? What are these the measurements? And usually this like wave 1 2 3 4 5, usually not always, but usually it goes in a fashion where it makes a channel. This is how we make the channel. Okay, all those channels out there, this is what they're doing. If you find one channel, try to count these waves, you will see them inside, right? So what really happens, let's just start step by step seeing that how it works. So Elliott wave within channel, what's happening? So like 1 2 3 4 5, A B C, and then price start going up and break this area. All right, yeah, the low of A. Then it is confirmed that this is wave either 1 or could be A. At this point, we don't know, if maybe like A, B, and C correction, and then boom to the downside, right? So this could be a correction. So that's why you will see sometime on my chart that I put 1/A, 2/B, right? And also you can see the B wave, if it is if it's a correction, then B wave is not a good zigzag. It's like very nasty correction. Okay, so that tells me that it's probably the correction. And obviously, what happened in the background. Okay, if I can count 5 waves to the downside, then obviously we're gonna have a correction A, B, C, right? So otherwise, if it is not clear, then just think like, okay, if this is maybe A1 or A, because I just told you A and C can have 5 subwaves in it. So you count 5 waves, it could be 1 or A. And then 3 waves, it could be wave B or 2, A, B, C. And then price breaks to the upside and then come down and this area holds. You draw the line here and it holds here and then makes inverse head and shoulder, and from there, and this TL also holds, it comes and hit the TL again, small wave 1 and wave 2. That tells you that, okay, this is wave 1, 2 followed by wave 3, 4, 5 to the upside. So this is, I call like 3 of 3. This wave 1, 2, and this is going to be wave 3, right? Out of the wave 3, the best area is this one. If you can confirm that you have 1 and 2 also out of this wave 3, so this wave 3 of 3 is the most powerful and most easy money making wave in all the Elliott wave 3 of 3. Always remember that. So then you have wave 3 going and hitting this channel, right? Then it drops a little bit, sub wave 4, and then wave 5 of this wave 3 goes a little bit beyond the channel. How you make the channel? You connect the beginning of wave 1, the point of beginning of wave 1, and the point ending wave 2. So you connect those two, you take that parallel line of that trend line, and then you place on the top of wave, the end of wave 1. You will find that wave 3 will go piercing this channel and go above, outside the channel. That confirms that it is wave 3. And if you can count wave 5, that is, even better. And after that, but again, also the calculation of this, we have 1.618 of wave 1. And we use that with the other, not retracement tool, the other tool. See, we have two tools here. Let me see something going up, so I can maybe GJ. So wave 3 usually is 1.618 of wave 1. Just remember that. Yeah, and you have these all these diagrams, right? I gave it to you, and this thing is very bad right now. Okay, see, this is here you can see it here. See, like well, I'm showing you the diagram, the bullish diagram, but here just to see, there's like wave 1, 2, 3, big one, then wave 4 and wave 5. It ends, and then the upwards you start moving, right? So you can say this is wave 1, 2, but this is not. It doesn't look like wave 3, but it could be like wave 1, 2, 1, 2, and then again 1, 2, 3, 4, 5 to the upside. So that's a lot of possibilities. The Elliott waves are very subjective. But I was going to show you the tool, right? So for example, this is a retracement tool, we all know. So let's see how much wave 2 retraces here. So we see here it is touching 50%. So it touched 50%, and then the down motion starts. So we look for 1.618 of this wave 1. So we use this tool and we place here. Whoops, what did I do? I forgot how to use this tool. And second point here, and then you have this third point, and you place it here. So you see this one went way. This is I was talking about the extended wave 3. So it's 1, 2 big 2.224. That's where it went, right? So this is wave extended wave 3. This is wave 4. This is wave 5. So this you use this tool to measure that. Similarly, here, for example, if this is wave 1 and 2, and you want to see that how far we go to the upside, then you use this tool, wave 1. This is wave 1, and then if it is wave 3 or C, whatever it is, you place this third point at the beginning of that wave, and then you see that it went to hit 100%. 100% is also good for wave 3. Okay, wave 3 cannot be shorter, but it can equal to wave 1 or 3. So if this is wave 3, possible. So you can see wave 1, 2, 3, small wave 4, and then wave 5 wave thing here, right? So it is impulse wave somehow. Similarly here, if you can see, you have wave 1, 2, then you have wave 3, wave 4, and wave 5, right? So here also you have 5 subwaves in it. Here 5 subwaves in it. Here you also have wave 1, 2, and 3. Then A, B, C correction, wave 4. This is wave 5, and this I would call some kind of, we call it X. God knows what. So we call it X. Okay. A, B, C, X, X, Y, Z. So X means it's just separate two corrections. So whatever it is. So this is how you use this tool. That's what I was going to show you. So you will use this tool to find out how far it's going at, wave 3. Now let me actually show you exactly where it is happening, right? So you will understand even better. I think I have some virus or something in my computer, or so Google or something, that it's for a few days it's acting, and it's just not, and I can't change. I have everything in this computer. Maybe sit down and get another computer and then switch everything to the other one. But I'm afraid whatever the problem is, I'm probably gonna switch that too. Whatever. Here you can see that, see, I have this all marked here a little bit, right? So we have subwaves 1, 2, 3, 4, 5. We make wave 1, and then boom, drop wave 2. Then you can see the blue count, wave 1, 2, then all this is wave 3, then this is wave 4, and this is wave 5 makes wave 3, right? Wave 1, wave 2, wave 3. And I actually followed that, and you all know it, most of you. And I was 100% correct on that. So then wave 4, A, B, C correction, A, B, C correction, here it came nice and clean. Then wave 5, 1, 2, 3. I'm looking at this that as 1, 2, 3, and then this is small wave 4, or maybe wave 4 is still going on, and then we may go for wave 5, or maybe wave 5 ended here. It all possibilities, because we got a really bad news for pound, and the pound is getting weaker, so I don't know how it's gonna go up, but anything can happen. So now this is a very complicated part, the end of wave 5, where the whole thing is finishing. So what happened is that people at the end of wave 5, usually when Elliott wave traders, they don't trade wave A or B. They wait to see if they have nice A wave A and wave B, and you have a nice head and shoulder already in place. Then they start trading wave C. Okay, this is how you're supposed to do it. And if you only like speculate that, okay, yeah, wave 5 is finished because it hit the channel, no, it can break and go above the channel if it is not finished. It all depends. So we have nicely made channel here. Then you connect. So once, oh, let me go back there because I off track here. So once you are here, right? So what you do is that you connect this wave at the top of wave 1, the end of wave 1, and the end of wave 3 when the price start coming down, and then take that parallel line and place at the end of wave 2 to get the target for wave 4. Okay, which is going to be looking like this. So you will see wave 4, it will come down here, and then usually this makes like a girdle pattern here inside within the channel, bullish girdle. Okay, this wave probably, let's say if you consider it's here, then it goes X, A, B, C, D around 61%, I mean 78%, and then start going up again for wave 5. So that's why I said harmonic patterns and Elliott wave, they are also the same thing, basically just a different way of looking at it. things, nothing else. This one is like a most likely a butterfly from like three. I mean, this is four, wave five, and then ABC correction goes 61% of this thing. You will see is 127%. Then you will see that okay, this is here is like a butterfly pattern, ended at 127%, followed by wave three. So I'll talk about that sometime later. I don't want to give you, a lot of things at one time. It will be very hard to grasp. So this wave 4, the price will touch the channel, come down in three-wave fashion and touch the channel. But just like wave 3, most of the time wave 4 will dip below the wave 4. That's where people call that, okay, if there is a triangle or something, they call it fake out. Not triangle, sorry, trend line. So they call it like a fake out. And then why fake out? It's not a fake out, it's just that, it does that, right? And it goes below, get out of the channel and then gets back in, like this figure, right? When it gets back in, it's a small wave 1 and 2 of wave 5. Will find the support on the channel, and then again you can do the same thing. You connect this 2 and 4 wherever it is ending, and then place on wave 3 to get wave 5 target, like this. Okay, so how about this here? See, 2 and 4, and I place it at 3. This is the highest point, which is the wave 3 ended here, but this is the highest point, and then look how price goes and kiss the channel. Very nice, very neat, right? So this is how it is. This one, well, I don't want to. Let's get to the study. Forget about this chart. Whatever it is doing. Let me just take a look of what's happening. So now this could be a correction, and that's why I'm being very careful and not giving you charts, because maybe this pound thing is in the correction mode. It went up, and then you see like this down move here, you have only 3 waves clearly, right? One A, B, C. But this ABC is very small as a wave, as a correction for this big move. So this could be only wave A of ABC correction. So this ABC A, then we will have A, B, C, B, and then 1, 2, 3, 4, 5, C somewhere there. So you will see, okay, 61% is maybe right around here. So that's the way it's gonna come out here. Maybe this is, A, B, C, A, then B, and then C. Big time to the downside if we stay below this high. So all of this depend. This is why Elliott wave, a lot of people don't like it, but they are good when you are trading harmonic patterns. They are very good to understand, and then so it's like a double confirmation or something. Simple. I'm gonna show you that in a minute, but where we are, okay, so see wave 4 here, and then it goes, this is the way it goes for wave 5. Okay, so and this is how the channel, so the channel doesn't stay exactly intact. It breaks, right, when it makes wave 3. Wave 3 is finished, then basically the channel is broken to the upside, right? Then we create a new, you connect wave 1 and wave 3, and then place the parallel line at wave 2 to get another channel here, channel target, right? Okay, so far, so good. Any question? Is it easy, too much, hard? Bella, how you doing? Are you gone? You're not gone, I know. You're there. Come on, give me some feedback. Well, a lot to remember, yeah. Well, see that you have the diagrams. So if you look into those, you see these channel that I'm showing, you have it, right? So if you just keep, go through with that and read what's written there. So you see, wave 3 usually breaks the channel's upper TL and goes for FE 1.618 of wave 1. Now we need to make a new channel to find a target for wave 4. So it's written there. So just follow that, and you will understand. It's no rocket science, man. It's easy. Just follow. Yeah, no. See, that's the key. But you don't have to find after it happens all five waves. That's what I'm saying. That if you can count, let's say this wave 1 and 2. For example, let me show you. Okay, let's get to the practical things, right? This is that's wave 5, and okay, what was that? Pound. Okay, so this is pound index, right? All right, so we're gonna go to pound. I'm not always right, but I'll show you what I think about it, and it could be wrong. It could be doing some other correction or whatever. But how I see it, and I've been telling you guys. For example, this is pound USD. Where's that chart go? Not this one. Okay, this one. You can see here. You see this wave 1, 2, then wave 3, wave 4, and remember we traded this big move to the downside, right? If you know what I'm talking about, I have the before chart on my website. You can go and see. I marked exactly this area because I knew that this is big wave 3. Then we need to go for wave 4. Wave 4 is usually, I forgot to tell you, but I will in a minute. But in fact, let me go and tell you first that see wave 3 calculation, and then wave 4. You see wave 4? Now read. Now connect the wave, the end of wave 1 and the end of wave 3. Now take a parallel line and place it at the end of wave 2 to create a channel and a target for wave 4. But I did not write here how much is that. Can I go to the last one? Okay. On this chart, you can see that, see wave 4, wave 3 equal to 1.618 of wave 1. Wave 4 is a flat correction, and wave 4 is equal to 38% of wave 3, right? So, for example, if I measure this, wave 3 start from here to here, right? So let's take a look why I say that it's gonna drop here. Do you see what happened here? I place this fib here, right? You see this 38% exactly. So when you have something like that, like you just said that, well, you'll see them after finishing it. No, it's not that way. It is, you see it, wave 5 coming down, because you see exactly what the calculations are. And the figures is 1, 2, then you have 1.618 for wave 3, then you have perfect 38% retracement. So once you see that this is 38% retracement, and then all of a sudden you have a big, a huge black engulfing candle, a daily candle, it tells you the whole rest of the story. Okay. So yeah, this is good because you can step by step you can find out what is next. So after finishing wave 5 to the downside, what happened? We start doing the correction, and out of that you can see clearly this is wave A correction. It has only 3 waves in it, A, B, C. Now this becomes only A, then you have A, B, C, B, and then C. And this A, B, C whole thing becomes A. Why? Because this is big correction. So you have to understand that how big the move is. Okay. So after this big move, A, B, C, this is not enough correction for this whole big move. So correction usually takes either same time or more than those 5 impulse wave fashion. So if you're dropping from here to here, whatever the time, you can see the time frame with this tool here that okay, you took this much here, right? The move from here to here. This correction should be from at least the next line, which is right here. So we are doing the correction right now, messed up correction, and it will continue until this because we drop big time. And I'm expecting the wave C to the upside. If this is wave A, so now we are in wave B, some sort of, because it's not clear. It's messed up. But it is a correction, right? So because of the pound, we dropped the other day. I thought I make the couple of charts that telling you that it's probably going up because we need a correction. That's the study is telling me. Okay, so every time it try to go up, it gets a slap to the downside, and that's what happened on the NFP last Friday. Now, but I'm sure that this is and we have not finished the correction for this down. No, this is not enough correction. But the thing is that market can do anything, right? Theoretically, it is not. Practically, maybe it is, and maybe we will see, this move continue to the downside big time, because what happened is on USDX, it broke to the upside as open sky right now. Okay, if it is immediately doesn't come in within 0219 area, and if it stays there for a little bit, for a couple of days, then we have a very good chance that USD will eat every other currency alive. Pound is dropping, and yen is, getting crushed, and euro is getting crushed, and they will continue getting crushed. Okay, all of those. Aussie on Friday, you saw what happened to Aussie. Okay, so that's what's happening. So this is a correction right now on pound. Like Chris, you're right. You see that this is a very, very nasty correction here. Okay, and it could be the correction is finished, because maybe it doesn't have to be. The market doesn't have to fulfill the requirements of this Elliott wave theory, right? Elliott wave or harmonic patterns can go out of the window anytime. The market, big news, big chaotic moves can destroy any technical at all whatsoever. So what we do is we try to find a technical so that we can make proper entry. That's all, right? But market is huge market. Every day trillions of dollar move every day. Some says that if you collect the stock markets of the whole world, and 10 times that is the forex market in one day. So, it's big. So it can do anything. But these studies help us, SNL levels and all that, just to make a good move. All right. Okay. Chris, I'm not gonna go into detail, because this webinar, you see this basic Elliott wave, so I'm just showing that how the Elliott waves are. I do the analysis, and tomorrow I have another. Well, I don't have it set, but I will send you the link for tomorrow webinar at 6 o'clock. Then we will cover the technicals and everything pair by pair again. It is okay. So until then, just pay time. Hold on just a minute. All right. So I'll do that later, and maybe right. We will do the calculation and then see what's happening. Okay, but it's a really nasty correction. But you see, I just show you the exact Elliott wave count in. And by the way, Ted, let me go back to the pound. Well, no. In fact, here I'll show you. When you say that it is, oh man, where is it? No, it's not there. No, it is gonna be. I'll find it here. Oh man, come on. Index or the pair index, and the pound index. Okay, I don't have the charts, very old charts here, but at least from here you will understand what I'm talking about. You see, I've been counting this index, right? So here we don't even have this. I even I predicted this move, and then the end of wave 3, then the down move for A and B. I predicted all, but those charts are on the other computer or other folder, I guess. But from here, even from here, you see that after wave 3, I said question mark, and we need wave 4, right? And right around here. So this is what the chart I gave you, that A is finished, B is finished, and for C and end of wave 4, we need to come down here and then go up. And according to that, we traded the pound. Look what happened. We came here at 4. And then what I say, from here, now we go up for wave 5, right? Look what happened. You see that? Exactly from there we start traveling. And from here, I knew that it is not going to go in a straight line. It will wobble. So right here, it gave me a reason that it's coming down. So I said it's going to come down here maybe and then continue for wave 5. Look what happened. Okay? That's what I'm talking about. And in between, I make these small charts, patterns, daily charts and all those 4-hour chart. And now from here, it starts going up again here. We need the wave 5 right around here, this area. So we need to go even further to the upside. Look what happened. And all of the, in between, I had these channel studies and this and that, and all of them were like perfectly fine. Look, see from here, and I pointed over there. Look what happened. Look what happened. And now we are at wave 5. So you see, what you telling that you can only see after it happens is not true. I've been telling you from here that how it is going to go up. First, it will come down for wave 4, then it will go up for wave 5, step by step, right? So that's what it is. Sometimes when it is following the Elliott wave, the price actually it is always following, but sometimes it is clear, sometimes it's not. So when it is clear, you mark that area and then you watch if it is happening. And if it is happening, then it gives you the setups in the pairs, the pound pairs. And that's why we had, remember in the for like a couple of months ago, how we traded pound Aussie for thousands of pips. You all know that it was going up in a straight line. This is why, because pound from here, pound was keep going in strong and strong, and our pound Aussie went up and hitting. My target was 2,500 pips above, and we finally reached that. Why? Because I knew that if from here to here, if the pound going from here to here in the strength, pound index, we will easily get that. Now from here, if wave 5 finishes, then we need a corrections, and that's what's happening right now on pound index. I just showed you the chart that it's coming down slowly. So if this is how it is, okay. So if you know exactly and you do the calculation and all that, it's very easy. Now here, see this again. Wave 4 is 38%. So this is what the 38%. I'll just show you on a pound Aussie chart how it was. I predicted this because of that, because it's a 38% after a big move, wave 3. You have 38% pullback. Sometimes it goes for 50%, but it's speculation. And then candlestick formation, and then setting, getting your setup in the IV system, and you keep shorting the damn. Okay. So it is, predictable. Now wave 4. Now wave 5 is 6.618% of wave 3. So again, you do that. You use that tool. You place 1 point here, 1 point here, and 1 point here. Then usually it's 0.618, sometimes 0.786, sometimes it's equal to wave 3, but most of the time, 80% of the time, it will be shorter than wave 3, maybe equal to wave 1. Okay, so this is like wave 1, 2, 3, 4, 5. Now where the harmonic pattern comes in, well, I will talk about that later because it's 7 o'clock already, and again, like Ted says, it's too much to remember. What I'll do is this, and if you any of you need any of these diagrams, and if you don't have it, just let me know. I will send you. I was going to talk about this triangle and ending diagonal. I don't know where that chart go, and then want to show that where the harmonic pattern comes in play with with this Elliott wave study. But tomorrow is the market recap, and then following day, Monday, Tuesday, I will do the continuation of this webinar where I'm going to explain all of this. Okay. So, any questions so far? Man, where? Okay, Ellie, you understand anything? Everything? Easy, hard, feedback? Okay, all right, good. Yeah, see, I'm telling you, it's easy, man. It's very easy. All you have to do is look at this chart. You know how much time it requires. That's what's happening right now here. Okay, watch this 5008 number here. Okay, very important. If this number hold here, then we may see it to the upside. I'm expecting that USDX not go too much higher, but you never know. This market can do anything. I was expecting actually 0219 to hold, but we went up. Just last thing, we're going to take a look before I close. Okay, now what I'm doing to this chart is this, okay, and you can do the same. So this is kind of wave 4, and this is ending diagonal. Remember, I was doing that ending diagonal as wave 5. That's what I was counting, but it just popped to the upside, messed up my thing. So normally, what happened is that of wave 4, see what are the extension levels? 127 and 1.618, right? So that's what we're gonna do. We're gonna pull this thing here, and now you see that 112 is gone. 127 is about to come. So I will expect that this thing probably will stop it. Now let's try to create a channel. So this, I will take this lowest point, and this is the lowest we can get, right? And then place the parallel in a different levels to see what happens. Maybe here, you know. So whichever is the low. Oops. If I place it here, then ironically it is coming exactly where this 127% is. If I place it at this high, well, almost the same area, but we are just getting this high little cutoff here, right? But I'll go with that, no big deal. If I place this one here and then take this one and place the top of this, remove these two, remove this as well. So this is the channel to these two lows, and we take this one here, then we already went above. If we put it here, then again the channel is coming exactly around somewhere, this 127. So I would say that this area is the one. Okay, so at 127 level from this wave 4, and wave 5 will finish around 127. That's one thing. Okay, now if from here to there is wave 1 or wave 3, from here to here, so let's see where we're gonna get our 0.618 for wave 5, the study we just did, right? We place the end of wave 4 if it is wave 4. So where it is 0.618, it is coming right around here, right? So if you go and you place this thing here, so this is way above that, right? If you take this length here from here to here, you see 0.618 extension here, right? The price can go slowly to this area, but this is the secondary one. It can stop at 50% as well. Okay, that doesn't have to be 70%. So 50%, you can easily see that it is coming into this channel area as well. All right, so we leave this alone here, this tool. We go back here and man, should have done that here. Okay, and see it's 50% coming here, and if you take this one and place it there, it's 50% intersecting with this channel tier and our this pullback here. I mean, projection is also coming. You see that? So 127 projection is coming exactly at 50%, around 50% of the expansion level for wave 5, and the channel also coming in that area. So I would say this is the area to watch, and hopefully this will hold. And the last thing to do is that measure this thing here to see how much is it. Is it 127 coming in this way as well? Then it will reinforce the whole thing. It is coming 1.618 of this move, right? So that is also a good thing that we are having 3 number 1.618 of this move, 127 of this move, and 50% expansion of the whole wave 3 coming around this area, and your channel is there as well. So I would say this one maybe we're gonna go a little more higher on this USD. Euro will get weaker, pound probably get more weaker, both, and once we get there we will see what will happen. Okay, but it's not gonna go in a straight line. Maybe it will dip. Be aware of this high at 0219. So we are getting a stop at 141.4 line, right? So maybe it will pull back and come down to this 0219 and then pop to the upside. So let's see what happens. So this is just the market just open up, and it can do its fishy things. I don't even know if we have any news. All right, so this is more than an hour already. So this is what it is. This is how I, Elliott wave measurement and all of that I just did in front of you. So this is how I do it. So how is it? Everything, Ellie? Good? Yeah, like Ted says, there's too much to remember. Yeah, of course, but if you start remembering little by little, you'll get it, and then it will become a daily life. It's like what to cook, how to make an omelet. Put this and that in a fry pan, oil, beat up the egg, salt, pepper. Simple as that. No big deal. Okay, so this is it for now, and tomorrow we will do the market recap, and then following day I will again make a webinar, and then we will talk about how Elliott wave and harmonic patterns gets together and help us find some good moves. Okay, Ted. I'll do it more and more then. Okay, I'll see. Actually, I just showed you how to count and counted move the pound index and pound pound USD, right? Then I'll when we go day after tomorrow, like Tuesday, I'm gonna do again this webinar, training webinar. Then I'll show you live charts where these waves are cooking right now. Okay, maybe wave 3 is about to start somewhere, and we will even trade them, try to trade them. Okay, according to that, and then we will see how harmonic patterns are, can fit into this Elliott wave. I'll just show you the chart, right? So you need to understand that which pattern shows up where, at what moment of time. Okay, so this is it for now, and hopefully, we will have a good week, this trading week, and see you guys tomorrow again. Okay, I will later tonight or maybe tomorrow morning. I'll send a link for tomorrow's webinar. Okay, I'll do day by day. Okay, that's my lifestyle, and I gave it to somebody else, and that's it's like getting confused. Sometimes he thinks that different times, different days. So I said, well, I'll handle it whenever I'm ready. Sometimes I get busy, and I can't do it. So maybe 2 days I'm not gonna do it. But like I did yesterday, I did today. I'm gonna do it tomorrow. So if I can do it, I'll do it every day. Whoever can join, fine. If not, you can see the recording. Always good, right? In your own time. Okay, anyway, so I'm gonna close it. Good night, good morning, good evening, whatever you have there, and have a very, very great trading week. Okay, so bye for now. See you tomorrow.